And we are officially live, broadcasting only on onedealaway.com. My name is Nev, this is Money Matters, and it's Friday. Hello. It's end of the month, last Friday of August. Here we go, entering into fall officially. Okay, it's not official, we still have a few weeks, but once we get into September, might as well call it fall, right? And today's episode is going to be absolutely off the chain amazing because we have all kinds of things to talk about. So I'm going to be showing you a map of crypto development, which is kind of cool, and what's going on in the country near you, or actually your own country, because you might not know what the government is doing, what the central banks are doing. We're also going to be talking about what's happening inside the JP Morgan and Consensus sort of acquisition, and what that actually might mean for central banking, and what that might mean for not just central banks, right, but also for the for our money, for our wealth, because what they're developing and what they're looking to potentially change will change the entire trajectory of where we are when it comes to our money. We're going to be looking at what happened yesterday during Chairman Powell's announcement, right, or news or whatnot, and we're going to be discussing of what the impact that actually has created. We're going to be talking about what impact that has for crypto, for assets, for your future, for your money. So there's going to be a lot of stuff that we're going to be talking about. And I think that is going to be very, very exciting. I would presume that it's going to be very, very exciting. So lot of things to talk about, lots of things to consider. So let's do this. All right, and good morning and welcome. Happy Friday to you. Like I said, end of August, August 28th to be exact. And yesterday was historic time for us and for monetary system. And you might say, well, why? Like, what happened? Here is what happened. Let me play you a clip. Hopefully you can hear it. Because I think it's going to be very important for us to discuss it. So here we go. Check it out.
Can pose serious risk to the economy. Inflation that runs below its desired level can lead to an unwelcome fall in longer-term inflation expectations, which in turn can pull actual inflation even lower, resulting in an adverse cycle of ever lower inflation and inflation expectations. This dynamic is a problem because expected inflation feeds directly into the general level of interest rates. Well-anchored inflation expectations are critical for giving the Fed the latitude to support employment when necessary without destabilizing inflation.
Okay, so what he was basically talking about during this is just a clip from the conversation. It's actually on YouTube, so if you want to watch the whole thing, I highly encourage you to do that. It's about an hour long or so. I did watch the whole thing more than once, because first time you just watch it, second time you are learning. So I was watching, I was paying attention to what he was saying, and basically what the expectations that we've had, which are that they're going to let the inflation run hot, so to speak, is what is going to happen. So they are shifting of how they do stuff. Now, before, you might notice that before, Fed basically had this whole thing of like trying to hit the 2% inflation and kind of keep it steady. And now he's saying, well, I don't know that that is going to work, which, by the way, they haven't hit 2% inflation officially speaking since like early 2000s or maybe like mid 2000, like. So anyways, it's been at least 10 years is what I'm trying to say, if not longer, that they couldn't hit that stuff. So now they're saying, well, we're just going to average it over time. So in 1 year, inflation might be like 1%. The following year, it might be 3 or 4%. And then the following year after that could be like 0.5%. But after that, we might let it go all the way to 5 just to catch up over time. they're basically also changing and saying, well, we're giving ourselves a new role as a Federal Reserve, and our job is to make sure people have jobs. Now, I don't know which bank ever had a job of making sure people had jobs other than their own employees, and definitely not central bank. And so this is an interesting piece. Now, he also did talk about the fact that, well, the we need to look into how our policies, how our fiscal policies affect those that are, on the lower end of economic status, so to speak, right? So who make less money. He also talked about people of color and different ethnicities and what effect that has on them. And I'm thinking over there, well, it's very easy why you are making the disparity, right? Because all of the money that you print goes to your buddies who are central bankers, who are, business owners, who are wealthy already, because it's connected already. You're already there in the same neighborhood, so to speak, in the same room doing the deals. And of course, it's natural that that happens. It's wrong, but it's natural that it happens. And so it was a very interesting piece that's what they're saying, that, hey, instead of looking at the prices and looking at how much money we're printing and looking at all the other stuff, we're going to look at employment, and we're going to leave these low rates as low as we humanly possibly can until we see some of this stuff, some of these gaps close. So that's basically what the announcement was. Now, here is an interesting piece that, I agree for once. I actually agree with Kramer. I have personal feelings about this man that I'm not going to share publicly, but I do agree with him on this one. He is on the side of the bulls and is basically saying that it's incredible for investors. Now, it depends on your definition of an investor, because everybody and their grandmother calls themselves investor when they buy half a share of Tesla stock and they say, I'm an investor. Maybe, maybe not. I don't know that. But anyways, what basically is saying that, they're going to go and invest, they're going to be basically supporting the markets, left, right, center, sideways, up, down, all the way through. And while the change might be subtle, it does reflect on that fact that they are going to be propping the markets as much as they can. And they're going to be keeping, they're basically saying that, hey, we'll keep this puppy, it doesn't really matter. We're not going to, change how we are seeing things. We're going to let the economy do its thing, but we're going to support it. So anytime that that the markets kind of go down, we'll step in and we'll buy stuff and we'll support it. So what that basically tells me personally is that we just got a Powell put, right? They used to be what's his face? Oh my gosh. My brain is not working. It will come to me eventually. It was another federal chairman that was basically, it's not Volcker. That's, I can't remember now. Sorry, y'all. Anyways, let's keep on going. And what basically now my brain completely stopped. Don't you love it when that happens, especially when you're doing a live show? Yeah. Okay. Never mind. Let's go there. So basically what I'm saying is that they will come in, they will step in, they will buy things, which lets me know that I can expect that the markets, as crazy as it is, will likely continue to climb on up. And things are going to continue staying stable-ish, meaning low rates when it comes to interest rates, which means that lending/borrowing is going to continue. Now, we could have another crisis because of the CLOs, right, that we talked about here on the channel, and the fact that the banks might be struggling, that kind of stuff. But, nonetheless, they're going to be supporting stuff. Now, Financial Times kind of shared this article that said yield curve steepens after Fed policy shift. And here it is. Yield curve steepens as 30-year treasuries sell off. And the curve basically just went and picked it up. Now, of course, they're not letting me read the whole thing until I subscribe. But this was all I wanted to share you. share with you. So if you want Financial Times, that's where you can get the full news of what's going on. So that's kind of bullish over there, which is also signaling that the market is going to continue on riding. Now, today's episode is mostly focusing on crypto. So why did we talk about this stuff? Well, because it all affects it. It all affects what's going on with the crypto world, because what we might be able to see now is that if this is sort of the future and what the government wants to do, we might see that folks might decide to say, I don't want to sit in as much cash. I want to diversify my liquid or cash portfolio. So that what they might do, some might jump back into the stocks, which is right. Some might go in and start buying gold. And some will definitely jump into things like Bitcoin and other cryptocurrencies. Speaking of Bitcoin and cryptocurrencies, let's take a look at the market and what's going on there. As you can see, mostly kind of sideways moves. Bitcoin is at 11,450. Ethereum is still below 400. Personally, I think that might be good buying opportunities, not a financial advice, just sort of the way that I kind of think about the whole thing and how I'm looking at it. If we look over at the change and what's going on, and my apologies, things have been running kind of slower. Holy mackerel, we had some things just go straight on up. So who is going straight on up? UMA, Numeraire, 42.25%, 41.21% respectively. Elrond up almost 21%. Yearn Finance continues to climb up almost 15%. They're over $16,700, y'all. So they're definitely continuing to go up. Mana up over 12%. Ampliford up almost 11.5%, almost 12%. Synthetics up just short of 10%. Serum. So a lot of DeFi coins are going up. When we look at what's going on the way down, we're seeing that Aragon is down 13%, Band Protocol down 7.6%, RLC is down 6.3%, Nervous down 5.7%, Nano down 5%. So not a whole lot of coins that are down. We had a few that are up. Overall, sideways market. So from what it looks like, what it appears to be. Now, one of the things that I wanted to share with you is I have just recently learned about this very, very cool website that gives us the world. And you're like, what's so exciting about the world, Nev? There's nothing excited here. It's just a map of the world. Yes, but this is a very special map. This is a map of central bank digital currency and tracking it. Right here underneath it, we have different ways to take a look at what's going on with the central bank digital currency. Now, when we're saying digital currency, I don't mean just like a dollars that exist today. I'm talking about on a decentralized ledger, which is what I believe is coming. And here is what's going on around the world. All right, so let's see who launched. Okay, here, when I click on this, there we go. We do have a few places around the world that have already launched their digital cryptocurrency. No, not Brazil. So you will see Uruguay is one of them, and they launched it in 2017. So they've been going for a while. Venezuela, 2017. Let's see, Iran, 2019, and Senegal in 2016. Okay, right? That's who it is. No, don't give me the green states. All right, now who is piloting? Check this out. All right, hold on. There we go. So pilot is happening Canada, not United States. Canada, Bank of Canada starting to pilot. Of course, Russia, Kazakhstan, China. Let's see, we have Philippines, right? So there's South Africa. So you will see that quite a bit of folks. Now I'm leaving those that are launched and that are in pilot. And you can see how much of the world is right there. And we have Estonia over there. Little tiny little dot. All right, now who is in development of it? This is sort of like, okay, did I double click it now? Yes, I did. It came on. Now it came off. Hold on. It has a little bit of a lag. So as you can see, we've added a few more countries to the whole thing, right? I mean, Brazil joined the party. Let's see, Denmark joined. No, they're not. They didn't join the party. Sweden joined the party. Let's see. No, not Iran. Turkey's joining. Saudi Arabia, right? So you can see that there are a few different places. And then we click on the research of who's researching to potentially be able to join. And now you will see that a whole lot more countries are jumping into it, including United States. So they are jumping in. Australia is joining the party. India is joining the party. We have just about all of Scandinavia, right? Finland, as well as, you can't really see it, but I can zoom in. Can I zoom in? Yes, I can. So we're seeing even some of the African countries, Ghana, Egypt, Morocco, right? Kenya, they're all starting to jump in. France is jumping in. Germany is jumping in. Iceland, UK. As you can see, many more countries are starting to kind of come into this whole thing. And of course, we also have an ability to say, well, who canceled their launch? And we are going to add a few more countries. And let me show you. There's a few countries. Oh, there should be. Who is that? Hold on. Go away. Go away. All right. Rwanda is also in the research part of it. Now, the light blue is canceled. So Italy tried and they canceled. Estonia canceled. Denmark tried and then canceled. So there are a few different places that have canceled. But overall, we have 66 CBDC properties. So there are 66 countries that have either tried, that are researching, that are rolling it out, that have launched it, or that are just like playing around with it. So basically, as you can see, most, not all, but most of the world is starting to get into it. We're having some countries in, we see Chile, right? They're in research stage. There's not Peru, stop it. Ecuador is 2014. They tried and canceled, but it won't surprise me if they decide to kind of jump back in. As you can see, folks, it's just about entire world, and this is going to change how money operates. So right now, we have received a new sort of driving force for fiscal policy, right? Yesterday, that changed the dollar for forever. Now, with CBDCs starting to roll out and continuing to roll out as the time progresses, we are going to see money changing forever. So those paper, thingies that you're used to, the swiping of the cards and stuff, that is all going to change. Now, swiping of the cards won't. It just won't necessarily, like your bank account and all of that stuff won't run exactly the same. And where I think things are going to roll out, and it might have something to do with the next or upcoming crash, banking crisis that people have been talking about, that we've talked about here on the show as well, is that the central banks will be the direct lender and issuer of currency to the public, meaning banks won't be needed because a lot of these things will be digital, and so there might not be necessarily any need whatsoever for our regular old banks. Sure, some might still exist and stuff, but it might be more like a convenience store more than a supermarket that we are used to kind of going to. So that's kind of where I see things going. Now, one of the pieces that I think is also very interesting is that you might have heard of a thing called SWIFT, which is International Exchange of Funds. So let me go back to my little map since I have it here. And, it doesn't matter necessarily the colors now, but let's pretend that Canada, or Mexico for that matter, because that was the first one that I pointed to. Let's say Mexico and Canada decide to do a deal together, right? Well, in order to do a deal together, because US is sort of this reserve currency, they will exchange, Canada will exchange their dollar into US dollar. Mexico will exchange their peso over to US dollar. They will do the exchange, they will do the trade piece, right? Like, okay, give me, this for that, and here's the exchange of the money and all of that stuff. All of that goes through the US dollar. In order for it to go through US dollar, it has to go through the SWIFT system. Swift system was built basically in 70s. It's old, it's clunky, it's backwards, it doesn't work nearly as well, and there are many problems within it. In addition to it, it's also very costly, very expensive to transfer that stuff, right? You try to wire the money, right? You have to pay like 15-20 bucks, and then the recipient might have to pay 15-20 bucks. And for international, there might be international fees and all this different stuff. And because US controls it, they have been weaponizing it, meaning, hey, if we don't like you as a country, you can't use our system. It's like, you know, a 3-year-old boy. Well, you didn't invite me to your birthday party, so now you can't play with my truck, right? Like, that's kind of where we are right now. And I know it's a bit more complex and complicated than that. I get it. But what I'm saying is that that's kind of where we are right now. Now, what is the new thing that could develop? Well, in my humble opinion, it is going to be decentralized finance through use of technology, meaning cryptocurrencies. You also might know that JP Morgan, not that long ago, actually, it wasn't like 10 years ago, but not long ago, JP Morgan Chase CEO Jamie Dimon, or whatever his name is, it was basically saying that, hey, cryptocurrencies are scam, Bitcoin is a scam, don't invest in that, don't buy that, you know, you're going to get burned, you shouldn't be doing that, that's like the worst thing on the planet. But meanwhile, in the background, he was developing his own blockchain and JP Morgan coin. Yes, and we talked about it earlier this year, quite a few months back. You can actually probably go back onto the channel and check it out. Speaking of the channel, if you're watching this on YouTube, do me a favor, smash the like button, do subscribe, and hit a bell button so I can see you tomorrow and next day, and you get notified every time the show goes on, which is basically every single day, okay? And then, you know, leave me comments and questions. Let me know what your thoughts are. But anyways, we did talk about it, so you'll find it on the channel. Now, the news came out a couple of days ago that Consensus acquires JP Morgan's Quorum blockchain. So, Quorum, the enterprise blockchain platform developed by megabank JP Morgan Chase, is being acquired by Consensus, the Brooklyn, New York-based Ethereum venture studio. They have made an undisclosed strategic investment in Consensus. Some news are saying 50 million, but you know, I don't know that for a fact, right? JP Morgan will be a customer of Consensus because, right, they're taking it over, and they will be supporting JP Morgan and its blockchain efforts. Leverage a lot of the work that JP Morgan has done that's been internal for a long time, and support the ecosystem of other people who want to use the technology that's been developed. As more projects began building on Quorum, a privacy-centric fork of Ethereum, it became obvious to many of the blockchain world that the bank isn't the right place to maintain a large-scale open-source software project. So Quorum is basically a fork of Ethereum. It kind of basically uses very similar things that Ethereum, slightly different. And of course, JP Coin project was tokenized cash on Quorum Ledger. Remember, I told you that? And the other piece that Quorum does is tokenized loans, very similar to what we're seeing in the world of DeFi right now, except this decentralized, this would be centralized. Now, they're saying another important factor to Consensus is locking down interoperability between Quorum and Hyperledger Besu. The latter is an enterprise Ethereum client built by Consensus engineers, which is compatible with Ethereum public mainnet. So they're looking to kind of create the sort of the interoperability of the whole thing. Now, the interesting piece that was shared a couple days ago as well is right here on CNN. Let me play it for you so that you can kind of hear it.
Century technology Consensus buying JP Morgan's Ethereum-based blockchain unit Quorum. Now, as part of the deal, JP Morgan will also invest an undisclosed sum in Consensus. It's a company that develops software based on the Ethereum blockchain. Real-life examples of what Consensus has worked on include facilitating faster payment technology and improving supply chains. Joe Lubin is the founder of Consensus and co-founder of Ethereum and joins us now. Joe, fantastic to have you on the show. Huge congratulations on this deal. I know it's been rumored for a while. Just explain what this means and what additional powers this will give you to make real-world improvements.
Hi, Julia. Thanks for having me on today. As you indicated, Consensus is announcing today that we are acquiring JP Morgan's Quorum Enterprise Ethereum blockchain platform. We additionally will see an investment, a strategic investment from JP Morgan, and have a seat on the board dedicated to JP Morgan. We'll be working together.
All right, so I wanted to make sure I pause it over here because this is very, very crucial. Not only is JP Morgan one of the largest banks, as you know, but they're playing within the blockchain technology. They're going into it because they believe in it. Now, my question for all of my watchers, all of my audience that is not in blockchain, I'm going, what are you thinking? If everybody under the sun who is anybody who has some wealth is going into it, why are you not? Now, I know some people are saying, well, Buffett is not. Well, Buffett is also very different age, right? And so, he's still in Coca-Cola and bubblegum, which many of a younger audience will say, we understand that Coca-Cola is not really good for our health, and neither is our bubblegum because it's full of sugar, right? And we are all seeking for different things that we want to get into. Buffett also didn't understand technology and didn't start investing in things like Microsoft and Amazon and Apple and that kind of stuff when it first rolled out. I mean, and now he is very deeply involved with Microsoft, and I guess, him and what's the CEO that left? I'm telling you, today, my brain not firing on all cylinders, clearly. But they're like best buddies and stuff. So I need you to understand that not every investor is understanding and seeing it. And when you see somebody like Peter Schiff and that kind of stuff, they have products to sell you. They have products to sell you. So they can't, nobody can sell you Bitcoin. Okay? One thing to understand, when you see people out there and saying, hey, you come over here and I will sell you Bitcoin. Bitcoin is public, available for everybody to buy. There's no store that you have to go into. You might have to go into an exchange, right? Kind of like if you've ever traveled internationally, right? And you go and you show up to, say, Spain with US dollars. Well, you potentially could use them, I guess, but typically you need to exchange them for euros. So what do? You walk over to a thing that says cambio, right? Or an exchange office. You go in, you give them your little dollars, and they go in and they go, they count the little euros, and they give you that with the receipt of saying, here it is. They collect a little fee. You have your little euros, and now you can go to the cafe, sit down, enjoy your espresso and your little croissant, and enjoy the day, right? I mean, that's kind of how it works. So that's a very similar thing. Just kind of start thinking a little bit differently about it. But there's nobody that can sell you that, like, it's not in a store. You can come in and say, Nev, how do I buy? I can show you how to buy it, but I can't sell it to you. I can send it to you, I guess. I can gift it to you. I mean, we could exchange some sort of something, but what I'm saying is it's a currency, right? And it's a store of value, store of wealth. So let's continue with this piece because there's something very, very important and key. And let me see if I can find it as well. Hold on.
With JP Morgan to merge the technical roadmaps of our own Hyperledger Besu client, which is an Ethereum mainnet.
And we talked about that stuff, right? We talked about that component as well. Hold on. There's a part where she asks him, I don't know why it's not updating. Come on, computer, work with me. But she, let me see. Let's try it here. And of course, it's buffering now. Will it play? Will it not play? Who knows? Come on. All right, y'all. Clearly, we are stuck and suffering with this whole thing. Let me see if I can restart it. But basically, she went in to ask him whether, whether Swift could be replaced by Ethereum. And his answer was absolutely amazing. They basically said, yes, this is a real potential for this to happen. So yes, you can expect that we could see this kind of happening. Hold on. I think I might have gotten going. Let's try it again. Please, let's hope it works.
Or are they as dedicated as ever?
Well, It's not my role to speak directly for JP Morgan, but
And handing it over to one of the experts. Is that this, or are they as dedicated as ever?
moving up the stack to the application layer.
That's not it. Hold on.
This open source protocol to Consensus made the most sense and enabled them to, in collaboration with us, focus on the higher value aspects of sort of moving up the stack to the application layer. Which
says something in terms of the vote of confidence, I guess, for Ethereum as one subset of this technology at this moment. I do want to hone in, though, on the payments technology that you mentioned. More than 400 plus institutional clients all over the world were transacting on that platform. We've talked about something called SWIFT on this show before, which currently is the standard for payments being transferred all over the world. And it's slow and it's clunky and errors get made. Do you see potentially what's here and what you can build on as being a replacement for SWIFT? Because there are other challengers out there that are perhaps looking to do the same.
All right, so this is the key question that I wanted to show you, and I'm glad that you stuck around and patient with me to take a look into this stuff, right? Because, so you have to remember, they have 400 institutional members. That's not like humans like you and I, where they trade with like $100 or $1,000 or even $100,000. These are large institutions that trade and send and transfer funds that, you know, probably millions are the minimum, and it goes on up from there. So I need you to kind of change your perspective and kind of how you're seeing things, how you're thinking about stuff, of what actually this means to have 400 institutional individuals within the space. And she asked a very key question: could this replace the SWIFT, right? And I don't know if you noticed, when she asked him that question, his smile was like, I mean, he's as good at playing poker as Neves. But let's hear what he has to say. All right, here we go.
Yeah, so I think that's a reasonable way to frame this. Payment technology evolved organically. First, there were transaction systems, and then things got complicated, and then messaging systems got built as an overlay over the transaction systems, and they're often out of sync and require reconciliation across different kinds of databases.
All right, so this is part of the problem with the current system, current accounting and stuff, right? Because you have the transactions, which kind of happens within the banks, but then you have all of these receipts and all of the other stuff, and that's what we need to have bookkeepers to kind of reconciliate all of the stuff and kind of like match things in our books and all of those things. Now, what is so cool about cryptocurrencies, about blockchain and the decentralized ledgers and that kind of stuff, right? It's the ability to have these messages, right? Like the receipts and that kind of stuff of what's going on, combined with the actual transaction, meaning the funds being transferred, and it all sits in one beautiful place where it gives you everything in one place. Now, this is very, very cool, and if you're an accountant, you need to start studying how blockchain works and how you can actually start positioning your job and your business into this stuff, because this is going to disrupt everything. Blockchain is going to disrupt everything, right? So it's going to disrupt banking. We've been talking about that stuff. It is going to disrupt accounting and bookkeeping and that kind of stuff. So you definitely want to start thinking and preparing yourself for the future. Start studying right now and understanding it, how it all works, and where you can plug in with your expertise to guide people, because we're still going to need folks to help us with this strategic planning and financial planning and where we're going and all of that stuff, right? But we're going to need professionals that are built for future. So you definitely want to start considering and looking into, wait a minute, how do I participate in this stuff? But let's let Mr. Joseph Lubin continue, all right?
Paraphrasing Marshall McLuhan, the transaction is now the message. And so the transaction and the message are married on blockchain technology. And blockchain technology, representing a new trust foundation, is going to whether it's central bank digital currencies or commercial bank digital currencies or pure cryptocurrencies. They will facilitate much more fluid real-time transactions and interactions across trustworthy collaboration networks. So it's it's revolution.
Yeah. Joe, very quickly, because I have about a minute, I want to ask you about the rise that we've seen in digital assets or cryptocurrencies.
All right, so just a quick pause before she asked him that question, and we're gonna watch it here. So what basically he's saying, and he's signaling that yes, there is a potential, right? He's not saying yes, it's definitely going to happen, but it could be a good contender. And so now, what has been going on? You might have also heard of a thing called Ripple or XRP, right? And Ripple has rolled out quite a few years back with their coin and saying, hey, we want to go in and we want to be the one sort of cryptocurrency project that is going to help with the banks kind of solve this transaction swift challenge. That's kind of where I think it started in 2018, maybe, that I first heard about it, and they were very, very adamant about talking about it. But since then, we have actually seen some banks leave XRP, leave Ripple, because they're saying that the volume is too slow and it's not really working for them and stuff. And now Ethereum is being the one that is being developed as a sort of the mechanism for exchange, for new financial innovations, for all these different things. And so now the battle has started, so to speak, where people are saying, is it going to be Ethereum or Ripple? Who is going to help replace the Swift? Either case scenario is what I see is that Swift and the current banking system as we know it, it is going to be completely transformed. It is going to go into crypto. It is going to go into digital cryptocurrencies or digital currencies, which is basically what crypto is. And they might get a different name or whatever, right? Kind of like we have like stable coins and altcoins and crypto and token and, all these different things. So they might get a little bit different name. However, it is going to happen. It is going to transpire. And so now being part of it early before the masses is incredibly important. For me personally, when I look at Ethereum, it is hugely underpriced. It is hugely super cheap, given all of the stuff that is being built on it. And if you don't know how technology works, is once you build it, in order to deploy it and run it and deal with it and work through it, you have to pay in ETH. So it becomes almost like a US dollar, right? You and I might go in and we want to buy, some sort of ERC20 token. And if you don't know what that is, look it up online, ERC20 token. It's basically an exchangeable a token that is built on top of Ethereum. So if we want to use one, whatever one you want, I don't care, pick whichever one you want, and we wanted to use it, we actually have to go in and utilize the new US dollar, the new sort of currency, right? The world reserve currency, so to speak, Ethereum. Now, Ethereum is not going to be potentially the store of value currency, but it is going to be currency for exchange. Potentially, people are saying Bitcoin could be store of value, and it has been doing pretty darn well for that. So we'll see. There are different projects that have different things that they're doing, but that's kind of how I see it happening. Again, not a financial advice, but just the way that I see the world. All right, let's go in strong and finish with this amazing question.
This year, Ethereum, to Bitcoin, there's been a lot of enthusiasm. I can name them all, I won't. Is this time different? Is this time different from when we saw the rise and fall, if I go back to 2018, for example, simply because regulators are talking about it more people are buying? Is this time different in your mind?
Well, this time represents a quantum leap in maturity for the systems that are being built and utilized. The ICO boom had some problems, but it also birthed some really great projects. Many of the tokens associated with those projects are still in use. The projects are maturing. They constitute what we call decentralized finance. And bottom line, what's happening is that there are new cohorts of users and developers that are coming online that are seeing real value in the protocol, in the application built on the protocol, and they're making use of the token in real-time transactions. They're staking the token in different networks.
All right. So as you can see, he's basically very bullish and saying, you know, what we saw before with all of the stuff, ins and outs and that kind of stuff, that's not where we are right now. You know, you will be fine. It should be fine completely. To finalize the news for today, I do have a bit more to share with you. One of these is coming from Blockchain News, and it's saying Federal Reserve flexible inflation monetary policy could boost Bitcoin price as investors stock up on BTC safe haven assets. And I absolutely agree. I think it will have an ability to boost the Bitcoin as well as other cryptocurrencies. I think it will also boost up on the gold. And I also believe it is going to boost up on real estate, because the cool piece is that as much as sucky it is when people are talking about inflation, you know, it's good for a monetary system, but it's really bad for your wealth and da 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 da. Well, there is one asset class that performs incredibly well in inflation, and that is real estate. And that is why I'm so passionate about it. Another one is gold, equally as passionate about it. And the third one that is sort of built for that, but we just don't know because we don't have as long of a historic component behind it, is Bitcoin and cryptocurrencies. But of course, it does have a very strong potential. And the cool piece about Bitcoin, while it's not as certain, so it does have a much higher reward versus the risk component to it, which is why I am so passionate about it. So those are the three things that I am super passionate about. And Mr. Powell just made my day when he made the announcement that he did, because that lets me know that my financial strategy is going to work and I should continue working it. If you want to continue working on my or very similar financial strategy as well and learn what my strategy is, I do invite you to continue to stay tuned in with Money Matters Show. Show up live, ask the questions, watch the YouTube video, which, by the way, if you're on YouTube, smash that like button. Thank you. And please, please and thank you, maybe. And, you know, do come into onedealaway.com. Check out all of the products. Academy offers all these different courses, including how to invest in crypto, including how to get into real estate, including all kinds of cool things that you get for super low monthly price. And you can unsubscribe whenever you want, and it's no long-term contracts or anything crazy like that. So that's one piece over here that is kind of happening. The other one that is also very interesting is Winklevoss says Bitcoin price to reach $500,000 per Bitcoin, and he puts in his argument of why BTC is better than gold and oil. Now, is it not? Could it not? I really don't know. You can definitely read more about it on Blockchain News if you want to, but do keep in mind that he does have a reason to tell you why it should be. Not that he can sell you Bitcoin, but he does sell you Bitcoin because he does own Gemini, which is an exchange platform, centralized exchange platform, where you can go in and basically buy Bitcoin. Okay, so that's kind of how it all works over here. So there we go. That's it for the news for today. That's it for the show for today. I do appreciate y'all watching. One quick thing before we go into the Q&A is that I have to go and play around with some stuff and do some stuff on the business. So that means I'm not going to be around this weekend. So we're not going to have a show on Saturday or Sunday whatsoever, but we will pick it up on Monday. However, I am having a very, very special coaching thing happening later on today in a few hours with one of my students who has agreed to allow me to record the coaching piece. So we'll see how it's going to go, and who knows, if I have time to post it, I might. It might be just a snippets, whatever. We'll see what we can do. I'm saying is I will make sure that I share with you, because I want to make sure that you're learning from my students as well. But that's something to kind of be coming. Anyways, thanks for watching. Until next time, stay forever money blessed. Do remember, you are only one deal away.